Stock is higher by about 2% after reporting earnings. The company's call kicks off in about 10 minutes. Let's bring in Bernstein's Stacey Rasgon. He has an outperform rating on the stock with a $125 price target. And Stacey, you did, bring some numbers down last month into the zone, I guess, where Applied Materials did land with the quarter. What's your headline in terms of the performance in the results we just got?
No. So the quarter was quite strong. No, they beat the quarter pretty solidly. They had guided, and the street was around 6.25 billion. They came in at 6.5. They did $1.94. Street was at $1.79. So it was a good quarter. And the guide was also quite strong, a little bit above the street. But I think expectations have been coming down. So I think people had thought that maybe things could be weaker. And it was a good strong guide. They guided 6.65 and $2. Street was at $1.94. If you sort of parse it out, they actually are still claiming that they've still got supply constraints. So as strong as this was, they seem to be suggesting that they've still got demand that they're not fulfilling. And they're trying to obviously they want to bring their production levels up to try to satisfy that. I know investors have been worried about memory. They've been worried about China. China was down year over year. DRAM was down year over year. But overall, foundry and everything else looks really strong. This was a solid print.
What are the key things to listen for or to press the company on during the conference call?
Yeah, I think the biggest question people are going to have is not so much like this quarter or the guide. It's what do they see next year? There's a big controversy on is wafer fabrication equipment, is it going to grow next year in the wake of what we're seeing, cuts in memory and a potential recession? People are worried about a semiconductor downturn. And we're almost at the point where investors probably actually want to see the companies in general take a more measured view of next year. And so I think the tone of the company, how bullish are they or not next year? Do they have enough backlog to carry them through, even if the underlying demand starts to get weaker? Those will be some of the things that people will be digging into on this call.
Is there much in the longer term investment cycle in terms of the industry's CapEx efforts here in North America that is something that's material to Applied Materials at these levels?
Longer term, I'm actually really bullish on industry CapEx levels and their impact on the semi-cap space. I think there's only two things you need to believe long term to really like semi-cap over that period. One is, do you think semis can grow over the cycle? And I think yes. And even at mid-single digits, we'll get ups and downs, but it'll be $1 trillion industry in 10 years, plus or minus. And the second question is, do you think capital intensity is structurally going higher? And I think absolutely the answer is yes. And people have been pinning on $100 billion kind of equipment market as a peak, and maybe, but I don't see why at some point you don't have $1 trillion industry and 20% capital intensity and have a $200 billion WFE. Maybe it'll take 10 years, but we'll get there at some point. So I'm actually very bullish long term on the prospects of this space because of those drivers.
But you think that shorter term, the street essentially wants the company to sort of rationalize expectations a little more and take, I guess, recognition of the fact that stocks are down 35%. Everyone's anticipating a little bit of friction in the market?
Yeah, I think buy-side investors already have the equipment market down, and in some cases reasonably materially next year. So that's where expectations already are. That's why the stocks have been weak. The multiples have been coming down because they're starting to price that in. So in some sense, that's a good thing. We've had the buy-side investors come down. The sell-side estimates have started to come down. We've actually started to see order cuts from the customers. What we have yet to see are the semi-cap companies themselves kind of acknowledge it. We're not really getting it here yet because, again, the near-term demand is still strong. The backlog is strong. They've got supply constraints that have been easing. But in general, investors like low expectations. As soon as those expectations get lowered, I think the stocks become eminently viable.
Yeah, then everyone says, okay, fine, now estimates can go up from here once they've bottomed and all that.
We're in that squirrely part of the cycle now. That's just kind of where we are now.
Yeah, it makes sense. You're at 125 on a price target. So what does that imply in terms of valuation of where you think earnings are going to settle?
Well, I mean, presumably, if everybody just rolled this through, earnings would go up, right? And we were already decently below the street going forward because, like I said, we had sort of corrected our out-year equipment estimates a little while back. And we'll see where things settle up. But I do not think the stocks in general are egregiously valued here, especially if we're, getting closer, to expectations and the numbers actually sort of matching up.
Got it. Stacey, appreciate you breaking it down for us right after the numbers hit. Thank you.